Welcome back to Investing Talk Podcast. Today, we're doing a deep dive into BlackBerry. A company that has certainly seen quite a journey. We're going to explore what the data tells us right now, from its fundamental health all the way to market sentiment, really trying to uncover if this journey could lead to a good investment opportunity for you. So, the big question, is BlackBerry a good time to buy its stock?
It's a really fascinating case study, isn't it? Just seeing how companies adapt or sometimes struggle to adapt, especially in these super competitive sectors. We'll peel back the layers on the numbers and explore the why behind them, give you the full context you need to understand this complex picture.
Okay. And before we jump in, if you're finding these deep dives valuable, please take a quick second to subscribe, maybe leave a comment on this deep dive. It really helps us reach more curious minds like yours. And if you're feeling generous, maybe consider buying us a coffee. It definitely fuels these deep dives.
It certainly does.
Yeah. Okay, let's unpack this BlackBerry story. So when we talk about whether to buy a stock, the first place many of us look is fundamentals, right? The basic health of the business. What do the recent numbers tell us about BlackBerry's financial standing? Revenue, profitability, that sort of thing.
Yeah, and what's, frankly, fascinating here, maybe a bit concerning, is that revenue trend. BlackBerry has seen a pretty dramatic plunge in revenue. We're talking nearly a third of its top line gone. It dropped from about $759 million in 2023 down to $534 million roughly in 2024. That's nearly a 30% decrease, 29.53% to be exact. Imagine running a business where almost a third of your income just vanishes year over year. It's a huge shift. Put immense pressure on everything.
That's 30%. Wow, that's a substantial hit. So what about profitability then? Are they managing to make money despite that, or is it dragging the bottom line down too?
Well, they reported a net loss of $79 million in 2024. Now, here's a slight positive spin, maybe. That loss is actually smaller compared to previous years.
Oh, okay. So it is getting better in a way, less loss.
Exactly. The bleeding is shrinking, you could say, which is something, but they are still operating in the red. It just signals these ongoing challenges in, getting that consistent revenue growth back and actually achieving profitability. Being in the red is never ideal, obviously.
Right. So declining revenues, still losing money. What does that imply for things like their debt levels or maybe their cash flow? Those are usually big indicators of financial stability, aren't they?
Precisely. And while our sources don't give us the exact figures for debt or cash flow, you can make a reasonable inference. With consistent net losses like these, it's pretty logical to assume that financial health, especially debt and cash burn, would be a significant concern for investors. Think of it like a household budget, right? If you consistently spend more than you earn, you either burn through savings, that's cash reserves, or you rack up debt. And that directly impacts the company's ability to invest in its future or even just sustain current operations.
Makes sense. And looking ahead, are there any projections for future earnings? Anything investors can kind of hang their hat on?
Well, there's no detailed information on future earnings projections available in the sources we looked at. And, given that recent financial performance, that absence itself might suggest a need for caution. Often, companies with really strong positive outlooks are keen to provide that forward-looking guidance. Its absence here leaves a bit of a question mark.
Right, another question mark.
Okay,
Let's pivot a bit. Where do they actually stand in their industry now? We all remember the phones, obviously, but that's history. What's their competitive landscape like today?
yeah, they've shifted pretty significantly. Now they're really focused on software and cybersecurity. They offer specialized products, things like BlackBerry Dynamics for secure mobility, and BBM Enterprise, their secure messaging platform. And while they do have this history of high security, which gives them a niche, especially in certain regulated industries, the real insight here is just how incredibly tough it is for them to scale and compete effectively.
Who are they up against now?
Well, they're squarely up against tech behemoths. Think Microsoft, Google,
Great.
and then established cybersecurity giants like Palo Alto Networks or CrowdStrike. So their niche is valuable, sure, but it's a really tough arena when you're competing against players with vastly deeper pockets and much broader market reach. It's a challenge.
Okay, so summing up the fundamentals. Declining revenue, still losing money, tough competition. It sounds challenging.
Challenging is a fair word, yeah.
But, sometimes a stock with challenges can still be a good buy if it's undervalued, right? If the price is low enough. What do the valuation metrics tell us? Is BlackBerry potentially a bargain?
Well, that's another tricky area. Our sources don't actually provide specific PE, PS, or PB ratios for BlackBerry.
Oh, no standard ratios.
Nope. And for listeners, PE is price to earnings. PS is price to sales, PB price to book. They're the common yardsticks.
Yeah.
Without these metrics, it's kind of like trying to price a house without knowing its size or what similar houses sold for nearby.
Mm-hmm.
It makes that direct quantitative value comparison much harder.
Yeah, that does make it tough. But I noticed something interesting in the sources, something that seems contradictory, maybe. Analysts apparently still have a buy rating on the stock, despite the volatility and all these fundamental challenges we just discussed. How does that work?
It absolutely seems contradictory, doesn't it? And it's a really crucial point. This kind of disconnect often suggests that, well, maybe some analysts are banking on a future turnaround that isn't obvious yet. Or perhaps they place a really high value on BlackBerry's specific intellectual property in secure communications, maybe more than the current market does.
So they see something others don't, or hope they do.
Potentially. Or maybe they believe in some strategic shift, like a big contract win or even an acquisition possibility that hasn't quite materialized yet. Essentially, it seems like a high conviction, but also high risk bet from their perspective. It implies potential undervaluation. But importantly, it's not based on a detailed discounted cash flow analysis or specific relative valuation numbers that were presented in our material. So we don't have a clear why behind their optimism. It's more inferred potential.
Okay. So beyond the fundamentals and the slightly confusing valuation picture, what about technical analysis? Things like price movements, trading volume, indicators. What's the technical picture look like for BlackBerry? What are the market signals?
Well, the recent price action, the main story there is significant volatility. That's a key takeaway.
Yeah.
We've seen some pretty erratic swings in forecasts, from predicting extreme lows to modest recoveries. Some analysts are even expecting the price to drop further. So this isn't a stock moving smoothly. It's unpredictable. Wild swings in short periods, which definitely increases risk.
Okay, unpredictable. And what about specific indicators like moving averages or RSI? Do those shed any light?
They do add some color, yeah. The stock's 50-day simple moving average, the SMA, is at $4. The longer-term 200-day SMA is $3.59.
So the short term is slightly above the long term?
Slightly, yeah, but they're quite close, which often suggests a struggle or lack of strong trend. And given the context, it points to weak momentum. Then you have the Relative Strength Index, RSI, who's at 3790 deal. Think of RSI like a momentum gauge from 0 to 100. Below 50 generally leans bearish, and below 30 is often seen as oversold. So 3790 tells us there's definitely more selling pressure than buying interest right now, suggests an overall downtrend.
So high volatility, bearish indicators. Sounds like a really tough environment for traders or anyone trying to time this.
It certainly is. The overall trend looks generally bearish, combined with that high volatility makes it particularly challenging, especially for short-term traders who rely on more predictable movements. It's not a smooth ride at all, more like a roller coaster, higher risk.
Got it. Okay, roller coaster technicals. What about the buzz? Beyond charts and financials, what's the latest news or just the general market sentiment around BlackBerry? Anything specific driving feelings?
Interestingly, our sources don't really highlight any specific major recent news, positive or negative. That would be a big catalyst. However, the prevailing sentiment in the market is described as bearish. Which brings us back to that head scratcher, right? Why would analysts maintain a buy rating if the broader market is skeptical and the fundamentals are struggling?
Yeah, it's the key question, isn't it?
It suggests maybe a strong belief in something long-term, perhaps that intellectual property, that the current market is overlooking or undervaluing right now.
Okay, but are there any clues, like recent analyst upgrades or downgrades, or maybe insider activity, executives buying or selling shares? That usually tells you something.
Well, the material only notes that analysts maintain a buy rating despite the bearish sentiment. It doesn't really elaborate on why or if there have been recent changes. And crucially, there's no detailed information mentioned in our sources about insider activity. Seeing if the execs themselves were buying or selling. Or even specific social media buzz. So we don't have those extra layers of insight into what the most informed people, or maybe the crowd, were thinking right now.
Right. So looking ahead then, are there any upcoming events that could actually change BlackBerry's trajectory? Things like new product launches, maybe a big earnings surprise, or, I don't know, regulatory changes, anything on the horizon?
The last earnings report mentioned was June 24th, 2025. But future dates aren't specified in the material we have. And more broadly, no, there are no specific upcoming catalysts really highlighted. Nothing like a major new product launch expected soon. No significant M&A activity talked about, like buying or selling parts of the business, or any big regulatory shifts anticipated.
Hmm.
So it means there isn't a clear, defined event right around the corner that the market is banking on to significantly shift the stock's fortunes. It feels more like investors might need to wait for a longer game to play out, if it does.
Okay, so not many obvious positive triggers coming up soon. What about the flip side? The risks. Every investment has them, but for BlackBerry, given everything we've discussed, what are the main ones you should really be aware of?
Yeah, this is absolutely crucial, especially for a stock like this. We can break the risks down into maybe three main buckets. First, you've got stock-specific risks. That includes its high volatility and those unpredictable price movements we talked about, big challenges for investors seeking stability.
Right.
Second, sector-specific risks. The cybersecurity market is just intensely competitive. You have these much larger players who could potentially overshadow BlackBerry's niche offerings and just keep grabbing market share. It's a real uphill battle.
Makes sense.
And third, of course, macroeconomic risks. General economic conditions like a recession or high inflation, plus broad regulatory changes that can hit technology stocks hard. BlackBerry wouldn't be immune to those wider headwinds. These affect everyone, but especially companies facing internal challenges too.
Okay. Wow. That's quite a picture. So after diving into all this, the tough financials, the volatile technicals, the kind of mixed and confusing sentiment, and these very real risks, what's the overall rating? What's the recommendation for BlackBerry stock right now based on our sources?
Okay, so based on all the available data we reviewed, the stock is given a rating of 4 out of 10.
4 out of 10. Okay.
Yeah, which indicates it's considered highly risky, primarily due to that volatility and the uncertain financial future. A 4 out of 10 really signals that a very cautious approach is needed here.
Highly risky. So who is the stock actually suited for then, if anyone? Is there a specific type of investor it might appeal to?
Well, the suggestion is that it might offer opportunities for speculative short-term trades, but, and this is a big but only if managed very, very carefully, the recommended entry price for that kind of speculative trading is suggested below $3, but it's explicitly stated, highly speculative, highly risky.
So not for your average investor.
Definitely not for the faint of heart or for anyone who can't afford to potentially lose a significant portion of that investment. For those speculative traders, the sources mentioned maybe using a stop-loss order around $2.50 to limit downside.
Right, to cut losses.
Exactly. And maybe a take-profit target around $4 to lock in any gains if they happen. But this kind of trading requires constant monitoring, real discipline.
Okay. And what about long-term investors, people looking to buy and hold for, say, 5, 10 years?
For them, it is not recommended.
Yeah.
Flat out. Not recommended for long-term investors, mainly due to that financial instability, the ongoing challenges with profitability, the declining revenue. It's just not the profile you typically look for.
Yeah.
Long-term portfolios usually seek consistent growth, solid profits, a clear competitive edge, thing that are currently pretty elusive for BlackBerry based on this data. And, while some analysts have that buy rating, the overall assessment we're seeing leans heavily into the risk. It really emphasizes that a buy recommendation isn't always simple or universally applicable.
So, as always, but maybe especially here, it's really advisable to consult with a qualified financial advisor before making any investment decisions. Get advice tailored to your own situation.
Absolutely. Well, that wraps up our deep dive into BlackBerry. What an interesting case study. It really highlights that tension between analyst ratings and, well, the underlying data sometimes.
Indeed. It shows how a company can get a buy rating from some corners, yet still be flagged by other analysis as highly risky, volatile, and pretty uncertain, particularly for anyone thinking long-term. Really underscores the complexity, doesn't it? And the importance of digging deeper yourself.
It truly does. It highlights why you need to look beyond just a single rating or a headline. You have to understand the why, the underlying factors, and maybe most importantly, consider your own investment goals and your personal tolerance for risk. What's right for one person clearly isn't for another here. Which really makes you wonder, doesn't it? In this world just flooded with information, sometimes conflicting signals, how do you figure out what truly makes a good buy for your portfolio? How do you align it with your specific goals, your timeline, and your comfort level with potentially losing money?
Something to mull over until our next deep dive. Thanks for joining us today.
Thanks for having me.
And we look forward to helping you unpack your next stack of sources.